My crypto fam, I'm going to keep you on your toes today. Let's freaking go. All right, now let's break down our featured story of the day and discuss the latest from Fidelity, one of the world's largest asset managers. They control $4.5 trillion in assets under management. They have a massive amount of investors, something of the sum like 80 million, something wild, right? Maybe even more than that. I got to look at the numbers here. Let me actually see here. It's actually, 43 million investors currently trust in Fidelity. So this is a major player, and their head of macro is predicting a $1 billion Bitcoin price target. Also, they just recently updated their Bitcoin ETF application as well. So let's break all this down. Welcome everyone in the live chat. Send that mofo above $35,000, shall we? And let's freaking go. All right, guys, here we go. Let's start right here. Fidelity revives their Bitcoin ETF. Let's break this baby down. ETFs, as we all know, are investment funds users can buy and sell on stock exchanges similar to individual stocks, allowing traders to invest in a variety of assets, including stocks, bonds, and in this case, the king crypto, Bitcoin. ETFs are designed to follow the performance of a specific index, asset, or a commodity. Bitcoin is getting more popular, as we know, and traditional investors and asset managers are eager to introduce Bitcoin ETFs to the market. We can't wait. Bitcoin ETF would let the investors get involved with the famous crypto without actually owning it. This makes it easier for traditional investors to join the crypto game. Now, Fidelity, the highly respected name in finance, has made a big move by updating its app. Fidelity's recent ETF update pays special attention to reducing the risk associated with Bitcoin ETFs. The crypto market is known for the price swings, which we call volatility, and Fidelity understands the potential impact on investors. Addressing these risks is crucial to making a Bitcoin ETF work well and last long. Now, the crypto community has been awaiting eagerly for the Bitcoin ETF to become a reality for years, to say the least. It's been over a decade, fam. Even though the US SEC had rejected previous apps, the desire for an ETF tracking Bitcoin remains stronger than ever. A Bitcoin ETF offers a more stable and regulated way for the investors to join the crypto world. If you're not familiar with ETFs, they are like investment funds, only this is what the big wigs use to get their positions into Bitcoin. I must point out as well, clearly, that average day-to-day investors, we don't need ETFs. We can just go on any crypto exchange and buy the underlying asset. This is for the big guys. This is for the billion-dollar asset managers. This is for the trillion-dollar asset managers. This is for the companies worth hundreds of millions of dollars. The companies that are unable to invest into Bitcoin without the protection of a regulated exchange traded fund. That's what this is for. This is going to usher in the big money. That $700 trillion total addressable market, that's what the ETFs are for. This is how the trillions sitting on the sidelines enter Bitcoin. Right now, the Bitcoin market cap is only freaking north of 500 billion. That's less, like roughly $500 billion. That's virtually nothing on the grand scheme of things. We're talking 700 trillion total addressable market, which Bitcoin is going to be tapping into. And my friends, that's why this is such a big freaking deal. Now, check this out. They recently, Fidelity, published research explaining why investors should buy Bitcoin. Here are 10 key points on why you should buy Bitcoin, according to Fidelity, the $4.5 trillion investment manager. First and foremost, Fidelity finds Bitcoin is the best money. That's correct. It's perfect money. Quoting them here, Bitcoin clearly possesses a lot of good qualities of money, combining the scarcity and durability of gold with the ease of use, storage, and transportability of fiat. That's right. It basically outcompetes all the competitors. It's like gold, but clearly much, much, much better. Next up, they explain the virtuous cycle of Bitcoin, quoting them here. This Bitcoin network competition is likely to result in a winner-take-all scenario as the network grows and becomes more valuable. Guess who is the winner that takes all? You guessed it, fam. Bitcoin. More users and hodlers equals higher demand, equals higher prices, equals more miners, equals higher security, makes it more attractive, and the circle of life of Bitcoin continues. Next up, they point out, they compare Bitcoin to the wheel, quoting them here in the report. The invention of the wheel represented an entirely new tech that once invented could never be reinvented. And similarly, never in human history had the problem of peer-to-peer electronic cash been solved until BTC. That's right, facts. Next up, Fidelity is amazed Bitcoin survived. Quoting them here, every minute, hour, day, and year the Bitcoin survives increases its chances of continuing into the future. People would probably underestimate all the negative events the Bitcoin has already endured. Preach. They also share, they provide hard numerical data showing how secure the Bitcoin network is compared to other coins, as they share here. In terms of sheer computational power required to alter the network's consensus, Bitcoin far exceeds any remaining proof-of-work competitors. That's right. And as the hash rate continues to go up, the network continues to adjust its difficulty approximately every 2 weeks and get stronger and stronger. And the more you attack the network, if you're silly enough to even attempt it, the stronger the network becomes. Next, Fidelity compares Bitcoin to the internet. That's right. The Internet Protocol Suite, known as TCP and IP, is an open source based layer where apps on top of which to be built. Owning Bitcoin would be akin to being able to own the base layer of the internet. So if you want to own the frickin' internet, just buy Bitcoin. It's even superior to the internet, in my opinion. Next up, Fidelity writes, Bitcoin continues to dominate the market cap of all competing cryptocurrency tokens. It's the king for a reason, and the Bitcoin market dominance is on the climb. You already know what time it is. Once we surpass 51%, it's an official 51% attack on the altcoin market. I'm anticipating the Bitcoin dominance to continue to climb. Let me know how high you feel it could potentially climb for this cycle. They also point out and agree that Bitcoin is useful. It appears at this point that Bitcoin has found a role in the digital asset ecosystem as a scarce store value asset at the very least. Now, there's no competition because even Ethereum is no store value asset. They don't have a finite limited supply. In fact, if you look on CoinMarketCap, you'll see next to infinity, you'll see next to Ethereum the infinity sign, which means there is no max supply. So therefore, it cannot be used as a store of value, unlike Bitcoin. Now, they also share and conclude Bitcoin should be considered first and separate from all the other digital assets that have followed it. I agree with that sentiment 100%. Let me know if you agree or disagree. And to read this entire research study, check the show notes below the video in the description. But now we got to get into the moment we have all been waiting for and discuss this $1 billion price target by Fidelity. Shout out to $0 G-Ro. I appreciate the super chat again. He says, welcome all. Smash that like fam. Thank you for the reminder. And yes, we're on the cusp of hitting 35,000. We're like $10 away right now. So send it and let's go. And let's hit a new annual high. Let's get this mofo lit, shall we? But yeah, now let's break down this $1 billion price prediction from Fidelity. And the year, FYI, by the year 2038. So if we're in 2023 right now, that's another 15 years. Could you imagine that? Let's break it down. Jurian Timmer, director of global macro at Fidelity, put forth the notion Bitcoin has the potential to reach a value of $1 billion per coin in the next 15 years, specifically around the year 2038. And to support the forecast, Timmer employed a combination of models and charts with a particular focus to the stock-to-flow model and his own demand model. These analytical tools form the foundation of his primary prediction. Now, here you can see on your screen, this chart employs Metcalfe's law. This is the demand model. And according to this, the number of its users grows linearly. A network's value grows geometrically. This means that the utility and adoption of Bitcoin are expected to grow more rapidly compared to its network of users, exchanges, ATMs, and participating retailers. Therefore, the model predicts that Bitcoin will reach $1 million by the year 2030. Now, this isn't so crazy. Stock-to-flow is also anticipating a price prediction basically after the halving in 2024, somewhere between $100,000 and $1 million per coin. So this is right in alignment with that target. It's also right in alignment with Cathie Wood's $1 million Bitcoin price target by the year 2030. So let's continue, shall we? So in contrast, Timmer's stock-to-flow supply model notes the event of significant price surges during each halving event. Consequently, when considering this model in conjunction with the other factors, it foresees a price range of $1 million to $10 million per Bitcoin by the year 2030. So again, the target I just shared of $1 million, they can see 10x that target by the year 2030. I hope they're right. Now, Timmer's demand model is more inclined towards reflecting the bottom of the Bitcoin price. And on the other hand, the stock-to-flow model seems to provide the better approximation for the peak of the king coin. However, it's worth noting that the disparity between these two models widens significantly significantly beyond the year 2030. The reason behind this gap is expected to be the changing value of the dollar. That's right. You got to take that into consideration. Now let's discuss how changes in the dollar could influence the Bitcoin price action. Timmer proposes the value of the dollar undergoes fluctuations over time when compared to other assets. For example, it was if a dollar was invested in stocks in the 18th century, its present day value would be roughly $4 billion. Good Lord, hyperinflation. Similarly, Timmer implied that if $1 million is invested today, it can grow to $1 billion in just a span of 20 years. This further revealed that the purchasing power of the dollar significantly reduced due to factors like inflation and depreciation. Thus, Timmer's statement implies that keeping a fixed amount of dollars for many years may lead to reduced purchasing power due to the assets changing value. And over the last few years, an increasing number of companies are taking over that $1 trillion market cap. You know what I mean? It's actually quite interesting, and I actually want to discuss this really quick. As I shared in yesterday's episode, we talked about Max Keiser being on Alex Jones' show, and Alex kept joking that Max, he's like, I know, Max, you have over 1 million Bitcoin. Now, if you just run the math, just for fun's sake, 1 million Bitcoin times a value of $1 million a coin, let's hypothetically say we're in the year 2030, Bitcoin hits $1 million. Someone's going to become a trillionaire. Someone is going to become a trillionaire. Whoever owns 1 million Bitcoin besides Satoshi will become a trillionaire. Right now, allegedly, trillionaires don't exist on the planet. I personally believe that the richest people on the planet we don't know about. They're not, in the public eye. They're moving in secrecy in the shadows, and there's probably families worth in excess of trillions of dollars. Easy peasy. But on paper, what do we got? We got Warren Buffett, we got Elon Musk, we got Jeff Bezos, and none of them are close to $1 trillion. But guess what? I think the first trillionaire will be a Bitcoiner. Let me know if you agree or disagree. And what are your feelings on a $1 billion Bitcoin price in which Fidelity is predicting by the year 2038 and the next 15 years? And hypothetically speaking, to all my Bitcoiners out there and all my hodlers, how would that change your freaking life? A $1 billion Bitcoin. Let me know, fam. Shout out to Satwise Jenks. He says 35,000. We did it.